Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, back with our annual Singapore Fintech Festival coverage. Organized by the Monetary Authority of Singapore, the Singapore Fintech Fest is on 6th edition. We're proud to be a media partner for the 4th year in a row. Joining me for the segment is Emin. He's the CEO of Avalanche. We're going to discuss bringing traditional finance and DeFi together. I mean, it's great to have you with us. Welcome to Trade Talks. And let's start with a high level of how Avalanche is bringing traditional and decentralized finance together.
Avalanche is the latest, greatest innovation in the blockchain space. It's the biggest thing that happened in the distributed system space in the last decade or so, in that it brings a consensus protocol so fast that it makes many of the operations that were until very recently impossible in the space of blockchains now possible. That is to say, transactions on Avalanche clear at the rate of many thousands per second with a latency of less than a second. So that takes the game from essentially, blockchains being very slow databases, very, very slow to react, to suddenly blockchains are almost essentially at the cusp of real time. They can clear many, many thousands of transactions, and they can take on many use cases that were until very recently just not available to us.
Right. And just because data providers and exchanges group all layer ones together, it doesn't mean they're the same. So how is Avalanche delivering DeFi that scales?
So Avalanche at its very core has a very different, very innovative consensus protocol that allows it to take transactions from submission to finalization in around 750 milliseconds. So that's about 3/4 of a second. So that's a very, very fast time for a trade to execute and clear. In addition to this, Avalanche has a different architecture from essentially all the other blockchains out there that allow it to handle multiple different distinct distinct use cases in different subnets, such that things that happen in one use case, for example, an NFT offering, do not affect what happens in other use cases, for example, DeFi. So what we see in many other chains where the fees go through the roof just because there's something hot happening on the chain do not happen in Avalanche. So this is just one of the two main ways in which Avalanche differentiates itself from all of the 8,000 coins out there, all these systems that came before it.
Right. And I mean, are you gaining traction here? What do the metrics look like in terms of growth?
Yeah, we've had a meteoric rise in the last year. About a year ago, our chain was just launched, and we started from scratch. But because it's technologically advanced, we've been managing to attract a huge number of people to the system. Even as I speak, we have about, I think, about $14 billion of TVL, total value locked in the system. Again, even as I speak, there's about $6 billion that moved from Ethereum and other chains into our system because it's so much easier, better, faster, cheaper to execute trades on the Avalanche system than, say, one of the legacy systems like Ethereum. And our users are, the user numbers are going through the roof as well. I think we are 5x what we were last month. And so month over month, the growth has been immense.
All right. I mean, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.